Hi everybody, this is Richard here on the 4th of November, being a Thursday. What we're looking at is a chart of the Dow, which continues to creep upwards without any real momentum. And there's no question that this double top high is still in place. Who knows, we might see once the news of the quantitative easing Mark II has been digested, which occurred overnight, where the Fed in the US decided that they were going to pump in $75 billion per month over the next year to tally up to $600 billion. They're going to put that into the economy to motivate business and also provide liquidity given the falling US dollar. So I just feel that we're likely to see new highs, but at this point, this long-term trend line is really much holding in place, and we haven't broken above the double top high here, although in the event that it does, then clearly the target is going to be it will extend quite rapidly to about 11,400 or possibly even higher to 11,600. The Aussie market today has broken through after going sideways for 2 months now. This has been particularly difficult given the long-term gyration that's gone on, and you can see back in time you have to go back a long way to be able to see that sort of sideways movement as we look back over the chart to July last year, July 09 there. So this movement has been particularly painful for traders, and we've just today, that's Thursday, it's currently about 10:30 a.m. have pushed up slightly above it without any real compulsion. I mean, normally we'd expect to see a blast through and then it would track up, fall back and find support off that rising trend line. That hasn't happened yet, so I am still very suspect, to be honest, of whether or not we're going to see significant highs, but clearly I wouldn't be surprised to see the Aussie market, that's the SPY we're looking at, creep up to 4,800 depending on what happens in the US tonight. Certainly on the MACD we have seen a cross back upwards, and this can be described as a solid base that's been built, and often these bases do provide a platform for further upside activity. In the event that it fails, I've still left the 54545 target in place. That would be the first target on the downside in the event that that occurs. What's at the heart of all of this is the US dollar. We've talked about this before. It is still in play, given that this long-term support line was tested when we first went to parity, and then overnight has been tested. In fact, it wasn't overnight, it was actually early this morning to about 5:30 or 6 a.m. We saw the announcement come at 2:30 p.m. New York time, and the market retested this support line and slightly poked through it, but then again you can also see here there's a slight poke through on that one as well, twice. So again, it's like the Australian market, we'd expect a blast through to occur if we had a lot of confidence in this. Deflation is the big concern in the US. They're not worried about inflation. It's deflation that's the issue, and that's why they're printing the money. And I think that once the demand comes on, we'll see a climb back up in US dollars, and that will depress the Aussie, Australian dollar. The Canadian dollar should rise, and the euro of course will come off. Let's go to the Australian dollar now. You can see that this is the blue line, thin blue line here is parity. This position that we had in place, that we went short at 9795 because I felt that it was going to provide another ABC down. That clearly didn't occur, so I got that one wrong, but that happens. And the question is where to next. So given that this will really complete what I would suggest is an ending diagonal here, and then this is an ABC, and so we're going up. Well, we can measure that we know that that is likely to yield, I've said this before, but to be honest, I really find it difficult to believe. In the event that it really got going, then we could see 1.0420. That's 4 cents or 400 pips above where we are now. So short term, we'd expect a retest of parity or something bigger, and that really depends again on what the US dollar is going to do. We can see also that the euro broke out of this diamond pattern that we talked about previously. Well, that's null and void now. Certainly it has tested the upper borderline of this channel, which has been running since mid-May this year. Messy trend through here. A spike high. Is it a fifth wave to complete? Big question mark on this too at the moment. Just don't know. But suggests that 4200 should be a place to pull up. And in the event that we retrace, well, we will take a measurement of that full wave up there, and the retracement should bring us down to about 1.36 or lower, 1.34 for the euro. Moving to gold, this is the financials. I wanted to show this because it also reflects just the lack of pace in this market. And if we took a channel line off the bottom there and copied that over, then we'd see that there really has been little enthusiasm here for the financials to push up, irrespective of these monstrous profits that have been issued, in excess of $20 billion between the big four banks now. Why are they doing it? It's a claw for dollars. I suspect they know that there's worse around the corner given the poor state of the US and indeed Europe. Overnight, there's big concerns coming out of Ireland. This is nothing new, but the cost of their bonds in the event of a sovereign default have just jumped up to about 5.2%, which is very high, very hard for any government to support. So there's real concerns about the prospect of a default there, but yet that's not on the news at the moment. What's important in this chart is that this is an A, B, C move up, and it doesn't mean, of course, that we don't get a low which finds support here somewhere and then goes up in the event that the broader market continues to go up. But it still looks very corrective. I wouldn't be surprised to see this pull down to the red line, but at the same time, again, if the broader market does move up, in line with this quantitative easing program, then clearly the top 4,700 roughly would be the target to shoot for. Gold, really testing this short-term trend line which began in August. So we've had effectively 3 months of significant trend up. We've now seen this pull back to the support line. It looks ABC. If that is the case, then this is the wave 1 and 2 that I was talking about. Way back here, which I thought this was the end of wave 2 here. I got that wrong. Of course, we forecast the targets, immediately found support there, and projected at 1380 is the broader target. So if further support is found here, and this is indeed turns into a wave 5, then 1400 would definitely be on the cards. But for the short term, it's tracking under our short-term target, which was 1360. Target 1 was in fact 1380, which we hit, fell back to the support line, ABC'd up to 1360, and now the jury's out. I want to point out though that this stochastic, this slow stochastic, is starting to fold over. It came up, expect a retest. Will I put that in as a broke through? Well, it has retested. Now's the time to determine. So I would go bullish above 1365, or indeed very bearish below 1324 at this point. So that's it, and the wrap up from the Market Forecaster. Go to the marketforecaster.com.au to see all the charts in more detail. Cheers.